Right, okay, good morning, everybody. Thanks very much for joining us today for this Accentuate by K3 Hub session, which is brought to you by members of the K3 Capital Group PLC, which is a multidisciplinary professional services group listed on the London Stock Exchange. My name is Marie Wadeson, and I am a managing director here at Quantuma. And on behalf of the K3 Capital Group, I also lead the K3 Hub. So for those that haven't already signed up, K3 Hub is a membership group of 1,500 like-minded professionals, which is growing by the day. For members, the K3 Hub offers a range of benefits, which include CPD and training programs such as this. And our members can also access the range of professional services offered by the members of our group. And for certain types of work, we are able to pay a referral fee in return. Today, I'm delighted to be joined by some of my colleagues from right the way across the K3 group, who will be providing a series of bite-sized market and technical updates. I'll introduce each of those as we work our way through today's itinerary. And finally, I'm delighted to welcome our very special guest speaker, Shane Lucas of AVN. Shane will introduce himself properly later on. Shane will be running a practice development update for us today. So just a few pieces of housekeeping before we get going. We would encourage you to ask questions of our speakers as we go along. I'm going to try and handle those at sort of the end of their sort of bite-sized sessions. So if you've got a question that we haven't covered in the session, please do use the Q&A functionality, which is open for you. If we run out of time and we don't get to cover all of your questions, ask the speakers, then we will come back to you directly following the session with a response. And that's about it. So into today's agenda then in that case. So I am delighted to welcome my colleague, Holly Bedford. Holly is Managing Director at K3 Tax Advisory. Holly specialises in providing transactional SMEs with tax advice on buying, selling, raising investment and refinancing businesses, whether that's in the UK or across borders. So Holly, over to you.
Thanks, Marie. Morning, everybody. So I'm a tax person, so I think, it's quite obvious that there's something really big coming around the corner in the tax world. And that's what the B word is. We're not going to talk about the other B words because we're all kind of bored of talking about that one now, aren't we? But as a result of the last couple of years, and probably also chucking in Brexit as well, the government debt, as we're all aware, has reached historic levels. It's in the trillions. I was just trying to find the up-to-date figures, but I'm not sure what they are, but it's a very, very big number. So the government are in the position now that they've got to raise funds one way or another. And in our world, that means tax take has to increase. There's a number of ways they could do that. They could actually go for the obvious route, such as increasing tax rates on the range of taxes they have out there to target. Alongside that, they can go for enforcement activity. So I think we're all aware there's a tax gap. There's a lot less tax collected than what should be paid by people. So the revenue do have a number of initiatives underway where they are targeting certain areas to try and increase, the tax that's coming in from those to more like appropriate levels. So I'm going to talk about that a bit. And then at the end, just a few words on planning that you might be able to just sneak in pre-budget or just some other topical things that are recent news in the tax world. Go to the next slide. Thank you. So the budget is next week on the 27th of October. As I already said, government borrowing has reached terrifying levels for very good reasons because of COVID. We are also looking at inflation for the first time in many, many years. The older people on this call might remember when inflation was a real thing. And we used to have interest rates that were actually in double digits at some point. For the last, 10 years, we've had just extraordinarily low interest rates, which has meant that carrying a lot of debt, either on a personal level or a government level, hasn't been such an issue. The service costs of that debt are low, but it won't take much of an interest rate increase to really ramp up the cost of carrying those levels of debt. Just sort of basic economics is that if inflation goes up, they're going to put up interest rates as well. So the two are linked. We're seeing a lot of inflationary pressures across the world at the moment. So the UK already is carrying the highest tax burden that they've had in decades. Even though we're under a Tory government, that's where we are. And the recently announced changes to the, what are they calling it, the Health and Social Care Levy, which is effectively 1.25% on employees NIC and also employers NIC. So in total, 2.5% on employment income, which is going to raise a significant amount of money. And then tacked on to that, they also said 1.25% on dividends. A lot of people might pay themselves by dividends, so I guess that's an obvious extension to those rules to try and maybe level the playing field a little bit in the different ways that people pay themselves. Can we have the next slide, please? So what could Rishi still do to us? There is, and has been for a number of years, a lot of speculation around capital gains tax rates. People might remember a couple of years ago, I think it's pre-COVID, they reduced the lifetime allowance for entrepreneurs relief from 10 million down to 1 million, which, you know, is obviously a massive change for entrepreneurs. It's a big deal for a lot of my clients who are in that space and are company shareholders. But I think the feeling is there's still further to go on capital gains tax. So people still have a 10% rate up to the first million of their gains in trading companies. And then after that, you're looking at 20%, which is less than half of what the employment income tax paid by, you know, better off people is. So although capital gains tax doesn't actually raise that much money, I think the numbers are 275,000 taxpayers paid it, and it raises less than 10 billion a year, which sounds a lot, but the NIC rate change that I just discussed is expected to raise over a lot more, over 12 billion. So although CGTs are really kind of political football, you know, there's that whole thing about, well, why should people that are living off assets pay less tax than people that are out there working? It's not a significant money raiser. Having said that, I still believe that things are going to happen to CGT. I'm not sure that the government can leave that one alone in the longer term. And then IHT is another one that could go up, although historically IHT is quite high. And on a national basis, IHT is quite high. That could be another one to kind of balance that feeling that we've hit employed people too hard. Could we have the next slide, please? And the other thing is increased enforcement. So the top one, CJRS, that's the official term for the furlough scheme. Massive amounts of money, £70 billion were paid out under the CJRS scheme, and it is estimated that up to 10% of that shouldn't have been paid, not just through proper fraud, but through errors, overclaims. And the rumour is there's 3,000 inquiries underway already. 3 people have been arrested for fraud. So that's a big thing that we know the revenue are focusing on now. They have, so Rishi said the government's investing 100 million in a special task force, over 1,000 staff to look at people that have made furlough claims. So we're expecting a lot of enforcement activity going on there, a lot of inquiry work, lots of nudge letters have already been sent. That's sort of really big thing that's changing at the moment. Just quickly going through the other things, IR35, that's the changes that people working through their own personal companies, it's become harder for employers to use them in that way. So there's a lot of emphasis now on employers to look at those kind of people and say, should you really be paying those people as limited companies? They really should be employees, and we want the employer's NIC from you. So the revenue are very active in that area. And the other three things, the clearance and counteractions team is people that I write to a lot. They've got a lot harder to deal with. They're getting really more difficult around company transactions. We've also heard there's a big push on holiday lets because everyone's been letting out their properties on Airbnb and not reporting the income. Another big push, and an ongoing push about people in the UK who are bringing money in from overseas and not paying tax on it. Next slide, please. So very quickly, right at the end, can we do any planning? So we're only a week away from the budget, so it's kind of hard to do pre-budget planning, but there are a few elections that it might be worth you talking to your clients about. These are for people who have done a transaction already. That might be a demerger, it might be an MBO, it might be just a group reorganization. They have the ability to trigger the tax now if they get their election in. So it's taxed at current rates rather than whatever happens post-budget. Kind of complicated to explain on this call, but if anyone wants to contact me afterwards and see if it's relevant to any of their clients, let me know. We've just done it for a client so that they know they're going to get the current rates. Other planning, possibly make some gifts now before rates go up. Going forward, EOTs are probably going to become more important. This is an employee ownership trust where shareholders can sell to an EOT with no capital gains. So who cares what the rates are? We're just hoping that is retained through the budget. I think I've got 1 minute left. The very last one, if you've got a single company, you're revising a single company, single trading company, think they might want to sell one of their trades in future, or really any single trading company you're revising, get them to set up a dormant subsidiary. It makes life so much easier in future. And again, because I've run out of time, if anybody wants me to explain that to them in a bit more detail, please just get in touch with me afterwards, and I will explain that one through to you. But I'm just saying it's very low cost, but it can make life so much better in future for trading companies if they want to end up selling one of their trades without selling the whole company in future. Sorry, Marie, have I gone over?
No, yeah, absolutely fine. We've had a couple of questions in for you, if that's all right, Holly. So, first question that's come in is about CGT. So, we've obviously been talking about CGT in the session, as have we for probably a number of years now. So, the question is, if CGT doesn't go up in this budget, can we assume the government are going to leave it at the current rates and reliefs?
No, I don't think so. I think we've been through this loop a few times in the last few budgets, and it's been like, right, it's going to happen this time, isn't it? It's going to happen this time. And it hasn't, but we've been in such exceptional circumstances and there's so much going on that it might just be that they decide to put their focus somewhere else for now. But I would bet my life that it's coming. In the next year or two, we're going to see CGT rates go up.
Okay, very good. And the other question that I've had in is around EOTs that you just touched on. Are any SMEs actually doing EOTs, or is it just really big companies?
They are doing them. It's become much more popular in the last, I'd say, 2 years. Before then, there were a lot of people kind of talking about it, but nobody was really doing it. It was more those sort of ones that hit the headlines, like Richer Sounds, Riverford Organics. But we've had a number of clients already that have, and within the wider K3 group, we see a lot of SME shareholders selling their companies to EOTs. So that's a trust that's looking after the employees going forward. It doesn't mean they're selling the company to the employees, they're selling it to a trust. And they're actually, they're a really good route for some people. So we are seeing it happen much more. It's really kind of ramping up that idea.
Thanks, Holly. And just one more question that's coming from the audience just now. Can you let me know your view with regards to dormant subsidiaries?
My view about them is that it's worth setting them up. I think I don't have enough time to explain the intricacies of why it's a good option, but a recent tax case has said that yes, it's something that is important for companies to claim a certain tax relief that we would really like them to be able to claim if they're selling off part of their trade. But I can, whoever asked that question, if you can, Marie, you can put them in touch with me, I can explain.
I will do that, no problem. Okay, well, thank you very much, Holly. That comes to the end of your session. So moving on, I am very pleased to be able to introduce to you Ian Barton. Ian is a colleague of mine from Quantuma and is a corporate finance professional. His expertise includes advising shareholders on transaction plans, sourcing funding and planning shareholder restructuring. He has specialist experience in logistics, software and infrastructure. Ian, over to you.
Thanks, Marie. Morning, everybody. Just picking up on that comment around employee ownership trust there. I mean, I'm working on one at the moment. So, and that is an owner-managed business that's looking to hand it on to their employees, turns over about 4 million. So, it is for all sizes and scales of businesses. I can definitely confirm that. Morning, everybody. I want to cover three things today. Firstly, giving you a view of where M&A activity is at the moment in the UK, what the drivers around that are, and then finally sort of what that means and where we think, or at least where I think we're heading with activity over the next 12 to 18 months. So first of all, I would say, look, the M&A market is very active. 2021 got off to a really accelerated start. And that was very much because of the pent-up demand from the various lockdowns, particularly last year. And as Holly has referred to, the capital gains tax fears that were evident in the budget in March, which didn't actually come to pass, but as Holly said, remain very much at the forefront of entrepreneurs' minds. So as a result, Q1 this year was very active. And that activity has really continued, and 2021 is looking like it actually might be the most active year in the UK for M&A on record. And why is that happening? Well, very much, the UK economy reopened. The vaccination programme has caused people to have greater confidence. But of course, the question is around the sustainability of that. And as we head into the autumn and winter, will we be able to stay ahead of that curve? What we have seen, though, is a continued quite a lot of inward investment still. This year, we've sold to US, Danish, a couple of French buyers. And as K3, we're the #1 advisor by volume. And in the first 9 months of the year, details hot off the press yesterday, we completed 245 deals, which is basically a deal a day, and something like 50% up on last year's like for like. And those deals range from micro SMEs and single site businesses, maybe 5 or 10 employees, run through our Knightsbridge brand, through owner managers and SMEs, to retirement sales, larger international disposals, and shareholder restructurings, which is where I and Quantuma tend to focus. And predominantly those have been positive deals. And by that, what I mean is not value deals, not driven by distress. The market remains buoyant and prices, I have to say, remain pretty high. So why is this? Owners really have been sat on their hands and compelled to do so for the last few years, firstly through Brexit and then obviously through COVID. And COVID has seen not all sectors hit badly. Some, in fact, have thrived. And as Marie referenced, I do a lot in software and logistics, and they really have been very proactive sectors. We've seen a lot of activity from private equity. There's always this talk about the wall of money and a huge war chest. And equity values, if you just look at the FTSE, it's currently sort of at or above the peak that it was pre-pandemic. So it's bounced back pretty quickly. And private equity is paying premiums to that. Everybody's probably aware of the Morrison's deal, which has been going through quite a public bid war. Well, the price that has gone for to private equity is a 60% premium to its pre-bid share price. And private equity deals are sort of 60% more activity proportionately in the market in the first half of 2021 compared to what was a reasonable comparator of the first half of 2019. So private equity is really coming to the fore. But equally, private companies who have been supported through government measures, they've got money to invest. Many who've survived through lockdown have streamlined themselves through that process. So they're lean, they've got cash on the balance sheets, and their appetite for sort of adding to their business through M&A really has never been higher. The other aspect is debt remains cheap, but as Holly said, for how long? I saw a stat the other day that said a 1% rise in interest rates is equivalent to about a quarter of the UK education budget for the government to pay. So, this is going to change quite rapidly, and I think most forecasters are suggesting interest rates will actually start to increase to 1 to 2% over the next 12 or 18 months. So, furthermore, why is it disruption just brings opportunity in the M&A markets? I sort of look at it in twofold, really. What I'd call offensive M&A, which is businesses looking to transform or cause strategic change, making a lasting impact on their business through acquisitions, either adding capacity, new geographies, digital technologies, whatever that might be. In fact, acquiring technology enhancements to the business model accounts for around about 25% of this year's deals so far, the stats tell us. The other part is defensive M&A, so that adapt to survive, salvaging value, safeguarding markets, which sort of is evidenced through non-core disposals, retirement sales, and reducing dependency on capital-intensive industries. We're seeing quite a few carve-outs from PLCs. I'm trying to close one next week, which is exactly that, where a PLC is selling various parts of its business off, and I'm advising a buyer who's buying one of those. And of course, the other aspect that we're all aware of is those supply chain challenges at the moment. The fragmentation of supply over the last few years has been an efficiency in the market, that just-in-time mentality. But that reliance on shipping that's caused is now actually a huge vulnerability for businesses. And, anecdotally, I'm dealing with a couple of e-commerce businesses that, the cost of a shipping container from the Far East has gone from below $5,000 a container to $15,000 to $20,000 a container in recent months. And that's going to push into the costs of those products being sold to consumers, causes inflation. And, there is talk of inflation going above 4% in the coming months. So mitigating those vulnerabilities, onshoring production, these could be all future drivers of UK M&A as well. The return to sort of boom and bust is something that is exercising a lot of economists' thoughts at the moment. And as a result, tax rises, as Holly's talked about, are going to be on the cards. And I think we will start to see that next week in the autumn statement. But I think, we'll see more of it perhaps in March as well. So where is 2022 likely to head? Those renewed fears of CGT have not gone away, and that is still driving the exit thoughts of lots of entrepreneurs, we tend to find. But equally, lots of owners perhaps held on to their businesses for slightly longer than they planned because of Brexit and COVID. And equally, the last couple of years has been a challenge for everybody. So there are owners who are just tired and just feel like they want to move on from their business life. And so that's driving disposals at all levels. I have to tell you, I have never been busier in 25 years of doing deals than I have been in the last 12 months. Businesses are going to be making themselves more resilient, diversifying their interests, building up capabilities via the M&A sort of route, that offensive route, as I talked about. And I think we'll see a lot more of that. And I would say agile management is going to be the new watchword. And agility is just another phrase for saying it's really hard to plan, because who knows where the future leads. But being able to respond to that change and being reactive is going to be something that's a real feature, I think, for businesses over the next 12 to 18 months. We're also likely, I think, to see a few more distressed opportunities. So for 2022 and 2023, I sort of see more deal activity, that continuing process for all the reasons I've talked about. Sadly, more of that being focused on distress and challenge, and people looking to exit businesses. Good businesses are still going to get sold for good prices. I'm advising a client at the moment who's bought lots of businesses over the last 5 years, and we just put an offer in on a business yesterday in the same sector, and that is at the highest multiple that they've offered for any business they've done in the last 5 years. So I think that shows the progression of value. So I would say be ready to act, be prepared, and of course take advice early about what your options might be, whether those are for positive reasons or for challenging reasons of distress.
That's great, thank you, Ian. We have had a couple of questions in, which I'll just run through now. So you covered off earlier in your session some stats around PE and kind of the wall of money that you referred to. Why is it that PE houses are so active at the minute?
I think actually that is very much about their flexibility. I mean, at the end of the day, private equity is relatively sector agnostic. It's looking for good opportunities in good solid sectors. So you'd struggle to find them funding a deal in travel or hospitality at the moment. But things where they can see are growing or have had a reasonable outcome of COVID that they're very keen to invest in. They're driven by strong cash flows. And so if you can demonstrate those things, then you're going to be a good target for private equity. But their flexibility is all encompassing. They were doing the vast majority of transactions in the first quarter of this year because they could move quickly, they could find solutions to problems, they could exit some shareholders and allow other shareholders to continue. So I think that is the key to it, flexibility. Plus the fact they've got money to invest. They didn't get a chance to spend a lot in 2020. And so they're catching up. So I think those are the drivers, Marie. Okay.
And one more. So, Ian, what have you learned from the lockdowns and deal doing?
Well, I would say you can do deals from your dining room, and you can do deals not necessarily even ever meeting the client face to face, or at least physically meeting the client. That isn't an ideal, I have to say, but I think tools that we're using here, Teams and Zoom and things like that, give everyone a lot more flexibility to have those quick 10 or 15-minute meetings, get large groups together. I mean, I suspect we'll never use conference call facilities ever again. I mean, being able to see people on a call is hugely valuable, I think, to the rapport build and negotiation even. But equally, I would say that people have become more pragmatic about what is achievable. The use of technology and tools means that people can be more efficient. It also sort of means that you're never really away from the office in some respects, and that brings its own challenges, of course. And I would say there's no real substitute to meeting clients, and the last 2 or 3 months have shown me that it's better if you can do some of those meetings face to face. But if we've got the flexibility of Zoom, I think all sides, banks, private equity owners, are able to get deals done and build rapport through a screen rather than meeting across the table.
Great, thank you. I think that's all the questions that I've got for you. Just before we move on to our final bite-size update for this morning, before we move on to Shane, I was very remiss at the beginning of the session. What I've forgotten to ask you all, for all of our guests today, for Shane's session, which is going to begin in about 15 minutes, he's asked that everybody could just grab some paper and a pen. I think we're going to do some drawing shortly. So if I could just ask you to grab that, and I'm going to move on to Ben now. So delighted to welcome my colleague, Ben Hamilton. Ben is a director in Quantum's Forensic Accounting and Investigations team, and he advises law firms, in-house legal teams and other professionals on a variety of technology, including legal technology and other advisory services. He works closely with our clients and contacts to continue to develop our forensic accounting service, and with a particular specialism in e-disclosure. So I'm going to hand over to Ben, who's going to talk to us about all things e-disclosure. Over to you. I think you're on mute, Ben.
There, I was ready and then made myself unready. Brilliant. Thanks, Marie. Yeah, so I'm here to talk about legal technology. I guess you'd really call it document technology. It used to be more for contentious matters, but now it's for non-contentious as well. So think of it as an add-on to your advice to clients, really. It's a new service that we've been doing at Quantuma for a short while, but it's a service that's been out in the wild for 10, 12 years now. So what is it? I won't go through all of the bullet points here. This is just so that if we do send this to everybody afterwards, you've got the information. What we do is we get the data, the client data, whether that be from emails, data storage devices, server stores, whatever it may be. We grab all that data, we consolidate it, deduplicate it, and then put it in a position where people can then review it. And again, that can be for contentious or non-contentious. That means you can run keyword searches, you can run combined searches, so documents that have been sent between John and Peter between a certain date range, containing certain words and not other words, and contain a PDF and were only sent to 2 people. You know, these sorts of things that you can do, these combined searches. Why do people do that? And there's also some analytics, which I'll show some slides on in a moment. Why do you do it? Well, for investigations, it's an obvious one. For litigations too, because you're trying to find, you're trying to find the number of the matter or the salient documents that you're going to rely upon. But there are also some non-contentious ways of using it for, a very good collaborative data storage tool, whereby you can create folders at a moment's notice based on certain criteria. I've mentioned here on this slide data subject access request, DSARs. These are something that happens to every company, hopefully not too many for yours or for your clients, but this is effectively where you've been asked to provide a bunch of information on the subject, the person asking for it, and you need to give that information within 30 days. And that can be very challenging depending on how much data you have. Employment, well, again, this affects all companies. So if there's some sort of disagreement within the business with an employee or an ex-employee, again, you need to get to the data quickly. You need to get eyes on quickly and find out what the problem may be. Very quickly on the final side of this slide, is it proportionate? Yes. It used to be, I've been doing this for about 12 years now. It used to be very, very expensive. Again, it would only have been used for the very big contentious litigation cases. Whereas now it's very much, I hate to do it down, but it's a very clever database, and therefore it's not witchcraft anymore. So it doesn't cost a lot of money to work on the data that you need to work on, not the hundreds of gigabytes that may be sat on the server. Next slide, please. So this is where we're going to go into a bunch of screenshots in the next couple of slides to give it some context. So the middle of this slide here really just goes to show that it should be comfortable to use for us, obviously, and for you guys. Think of it as a similarity to Windows Explorer and Microsoft Outlook. So you have your folder list on the left, you have your document list in the middle, you can filter on those, and then of course, if there's not too many of them, you can just look at them one by one. In the bottom middle of the screen, it just shows you what you'll see when you start looking at documents. Obviously, you'll see your document. You'll have a tagging panel on the left, which allows you to tag it for relevance, irrelevance. If it's a legal case, it could be for privilege or for needing redaction, or it could be a way of tagging documents for a tax issue or some other issue, which then puts it in a folder, which someone else can then concentrate on. It also does translation. So if you've got multiple languages, it will translate those obviously into English, but it will also translate from one language into another. I recently was on a call with our Polish office, and he challenged me to change some Dutch documents into Polish and see if that would work. And obviously I was pleased to see that it did. But it gave him the context of the documents enough so that he would be able to rely upon whether that is a useful document to be looked at later. And then maybe you might want to have it fully translated later down the line. On the top right, this is obviously a prettier diagram, which what it's showing here is all the different conversations between different email recipients. The bigger the ball, the more conversations are surrounding that person. And so therefore you can very quickly move it around and go to the different conversations that are happening between different individuals. On the left of that picture, it just shows the kind of analytics it gives you when you first log in. It will tell you the top terms that it thinks are useful. So it will tell you, how many of these terms are being used. It'll say where they're coming from, which email addresses, where they're going from, etc., etc. Basically, it's just it's a non-human-led way of being given some analytics, being given some ideas as to where to go with your documents. On the bottom right, this is where it starts getting a bit more analytical. Again, non-human-led. The system will automatically bubble up things it thinks are useful to the top. So in this case, we've got what we call cards. The first one there is saying that this Thomas Martin chap has received, and the bid in the box, if you can see it, is 26 times more than normal. So therefore, it's saying that there's a conversation going on with Thomas, which is 26 times more than it was in the previous, whatever it was, week or month or year. So that might be something that it's trying to draw your eye to. The second one there is a negative comment, sentiment. So the system will draw out negative words and negative phrases, and it doesn't have to be negative, it can be positive. But one of the things that we tend to use it most for is to boil up these conversations to the front. Because you and I couldn't possibly come up with hundreds of different phrases like, I don't like them, this was a bad idea, we shouldn't have done that trade, whatever it may be. You couldn't run searches for that, but the system will grab those and say, I think these are useful for you. Next slide, please. So this one is similar in essence. These are some other areas of the system that come as standard. The one on the left is a heat map. So you can put terms on the left-hand side. You can see fraud, criminal payment, etc., skiing. What happens here is it's giving you a heat map based on how many times that word is being used. And that might just point out to you something that's a bit unusual. Project X might be getting mentioned, 6 months after the project, when that would be unusual, for example. You can also do anomaly detection, where it will create a baseline for any words that you choose, and it will decide on what is a standard baseline for that word to be used. And if something goes above that baseline, then it will fire it out in front of you in purple. So again, for an investigative type slant, these are quite useful. On the right-hand side, this is kind of a variation on the theme when it comes to those emails, those email mapping that I showed you before. And this is just another way of looking at it, but at this time it will give you the words that are in the conversations and the number of emails going backwards and forwards between certain people. We used it recently on a case out in Dubai, where we moved the cursor around and suddenly we could see a whole bunch of Yahoo and Gmail accounts that we weren't expecting to see in there. And that was for an asset tracing case. Next slide, please. So this is called Brainspace. Some of you may have heard this name before. This is an analytics tool that's contained within. And on the left here, what you'll see is every single word in every single document in the matter database has been analysed and put into this Brainspace, this big cog, this big wheel. Inside there, it will then group documents based on their similarity to each other, the keywords that are in them, and concepts. So the way that it's typically used is you'll turn around, you'll move it around, you'll decide on a segment that's of use to you. And once you click on that, that's the right-hand side of this diagram, it will then be a bit more surgical and take you down to different levels of granularity. So where in the middle of this screen, you can see human rights, common law defendant. That's the one that I've clicked on there. And we can see on the right, that's 39,000, which is a huge amount of documents. It'll also give you the words that are most closely used in that segment. And it may be that you then drill down further. The point to this part here is this is quite a good analytics tool for finding pockets of documents, which you then may turn into a batch of documents to do a bit more analysis on. Next slide, please. So some examples of relevant cases. Again, I haven't put too much in the non-contentious area on here because the non-contentious ones aren't so exciting on a slideshow. But going from top left, litigation, there are so many different types of litigation, but really what it comes down to is it's fast-paced, lots and lots of documents, and useful to get stats. The quicker you can get the stats, the quicker you can know how much it's going to cost, or advise on how much it's going to potentially cost to do. One thing I didn't mention was machine learning. So earlier I said about non-human-led analytics. Well, human-led analytics are things like machine learning. So if you've got 100,000 documents or even 20,000 documents or less, it doesn't matter. But if you review 100 of them, the system will analyze all the words, all the metadata, the to, the from, the attachments, everything else. And it will shuffle the deck and it will say, right, everything on the left of this deck, I think is most closely related to what you think is relevant. And everything on the right is least likely to be relevant. So it's a quick way of deciding which documents you should be looking at first. Insolvency, we do a lot of different insolvency cases. DSARs are obviously quite a big part of that, whether it be shareholders, well, usually shareholders that want to find out a bit more about what's going on and why and how it relates to them. The reason I bring this up, again, lots of data, quick time frame. You've got 30 days technically to respond to the questions. So it's very useful. Sports betting, I've added this one in because this was an interesting one. We were looking at WhatsApps, emails, all sorts of things. We were having to extract the words out of photos of WhatsApp messages, video calls and audio calls. We can transcribe those automatically. And it was a huge amount of data, and it also labels images. So if you've got hundreds of images, it will actually say with reasonable clarity, this is a picture of a car and a dog. This is a picture of a construction site and an ATM. There's a yacht involved, whatever it may be. So that's probably, extortion was another similar one. It just comes down to quick paste, find data and see which way you need to go. That one was Bitcoin. So we needed to find bank account numbers to then find Bitcoin. And I've probably overrun slightly there, so apologies.
No, all fine. Thank you very much for that, Ben. It's very useful. I've got one question that's come in and also a request. So the question is, I guess it's almost two-part really. So we've talked about, or you referenced earlier some sort of large amounts of data, so which might imply that this is only really for large-scale problems or issues. Is that right? No, it used to be. It was very disproportionate for anything that wasn't huge in the old days. Now it used to cost £1,000 a gig to process data, and then whatever else was on top. Now it's £25 a gig, and a gig might be 5,000 emails or 5,000 documents. The smallest case we've got on at the moment is in the hundreds. I'm going to say about 350. Because it's a non-contentious one and it's a good place to consolidate the data. So multiple different employees in different offices can all see the data at the same time. They can make notes on it. They can folder documents. So no, if you've got 5,000 documents, that's 1 gigabyte. So it's very proportionate these days. Okay, thanks. And there's a second part to that question. So we've touched quite a lot on sort of legal cases and sort of helping to work with litigators, for example. I know that we've got quite a few accountants on, and I think this question may have come in from one of them. Is this a service that accountants might use as well, and in what scenarios? Yeah, I would say from a good data management standpoint is why accountants would use it. It also just means that you're able to get to the data faster. I mentioned collaboration before as well, so being able to reference documents. It also means that you've got a kind of a way of making sure that everyone's working on the correct version of a document. Because if it's stored on different people's machines and stored in different offices, that can get confusing. Plus, also for GDPR and things like that, you don't want to proliferate data across multiple machines, multiple offices. So I would say really when it comes down to it, it's good data management and effective searching. Oh, very quickly. The reason I say effective searching, everything gets OCR'd, optical character recognition. So even old scanned documents, the words are lifted off the page so they can then be searched on. And you can't do that in normal systems. They normally don't have OCR as standard. So for running a search and knowing that you've got the documents you need, that's where it comes in very, very handy. Great, thank you very much. Well, the other question was actually a request. I think you've got a couple of requests for some more information, so I'll put you in touch with those people after this session. So that brings us to the end of the first part of this session. So thank you very much to all of our speakers. So I am delighted now to move on to the second part of our session. I think until now we may have had the chat functionality switched off, but I believe the team that are running this very cleverly in the background about to switch the chat on. I hope that everybody managed to get my message earlier on about grabbing a pen and some paper. And without further ado, I'm very pleased to be able to hand over to our special guest, Shane Lucas, who is the Managing Director at AVN. Shane is today going to run a practice development session for us entitled Change the Mind, Change the Outcome. And amongst many other things, he's going to cover developing an effective pricing strategy, your client acquisition strategy and attracting clients that you want to work with, and then quite simply getting better results by changing the way that you think about your business. So without further ado, Shane, over to you.
Hi there, Marie. Thank you very much for that wonderful introduction, and welcome everybody. Thank you for joining me, and please do load up the chat box and just say hello in the chat box so I can see that you can hear me, that you're still present in the moment. Now, typically my presentations are targeted towards accountants. However, today's presentation is actually very generic in that it will apply to any business. So if you want to stay behind for it and you're not an accountant, you will still get a lot of value from this session. That's entirely up to you. I appreciate that maybe you've already decided in advance that maybe it's not for you. So I know that some people may want to bow out. Now's the time to do that if you don't feel that this would be appropriate. But as I say, it's going to be a thought-provoking session. And it's going to get you really focused on your business and taking it into a direction that's going to give you much more out for you to get out of it. Right then, okay, so first of all, nobody said hello in the chat box yet, so please do say hello. Let me know that you're here, that you're present in the moment. Yeah, there we go. Thank you, Dominic. That's one hello. Anyway, so keep those hellos coming in. Thank you, Julie. Brilliant. Okay. So at least I now know that the chat box works. Wonderful stuff. So keep the hellos coming in. I've still only had 2, and there are 30 people on here at the moment. So yeah, just keep those hellos coming in. Right then, let me begin. First of all, I want to say thank you to Quantuma and K3 Hub for inviting me to speak to you guys today. It's a real privilege to have been invited. And today's topic, as Marie has said, is entitled Change the Mindset, Change the Outcome. And quite often, you know, we've built our business, but we're maybe not getting the kinds of results that we'd like to be getting out of it. Maybe we're working more hours than we'd like, or just not getting that sense of fulfillment that we'd like to get out of it. So today, as I say, it's more of a thought-provoking session, just getting you to think about the way that you're running your business right now, because that's obviously responsible for the results that you're going to be getting, isn't it? A little bit about me, and I won't keep you too long on that, but my name's Shane Lucas, as Marie kindly said, Managing Director, owner of AVN. We've been helping accountants now for over 23 years. Accountants representing firms of different sizes, ranging from 35 plus million, 23 plus partner firms, right down to even startups. And we have different packages available for different people that enable them to achieve their vision for their practice. It's reduce the hours that they're working and ultimately achieve their desired exit value from their practice, because everybody wants to exit at some point. So that's a little bit about me. I don't need to go into that in any further detail. So in the next 45 or maybe 43 minutes now, what I'm going to be doing is getting you just to focus your mind, getting it tuned into achieving your business success. Okay. So briefly, right now for accountants, how the landscape is changing. We're going to be defining your dream practice. We're going to be making the shift towards looking at how you can make the shift towards a business that works much more for you. And defining what do you really want to get out of your practice, but more importantly, your life. You know, I'm a huge believer that your business, whether it's a practice, whether it's a law firm, whether it's a candlestick making business, it doesn't matter. A business is there to serve you, to give you the lifestyle that you really want to get out of it. And yet I find so many business owners, and accountants no exception, that find themselves working far more hours than they'd really like to, whether they're taking a great income or not. If you don't have the time to really enjoy that, or you're not able to go and explore the world for weeks on end, if that's what you'd like to do, then what's the point in all of that money? And then we're going to be looking at, you know, when will you start to make the changes necessary? Because otherwise we'll just go through life thinking, yeah, now 5 years time I'll do this, 5 years time I'll do this, and it's often too late. And then we'll look at the next step. So look, I've just got a few questions for you for the chat box. First of all, just tell me in the chat box, and this is why I wanted to say hello, so I want to know that more than 2 people are listening right now. How many years have you been in running your practice right now? So at partner level. Okay, now whether you started yourself, whether you've taken over as a partner, how many years has that been for? "21 years, Dominic. Good stuff. Now look, the rest of you, you can either have this as background noise, in which case you're not going to benefit that much from this session, or you can participate, you can interact, and you can start to see some results changing and improving in your business. So, okay, so we've got 31 years, 21 years startup, okay, and there's no right and wrong here at all, by the way. And James, fantastic, you're embarking on an incredibly exciting journey there, and I think now is a wonderful time for accountants to really start to form the practice that they want. Okay, well look, the reason I asked that is because I want to get a feel, and if you don't want to contribute in the chat box, that's up to you, but please do contribute on a sheet of paper in front of you and answer these questions for your own benefit. Now, obviously, with the exception of the startups, is the practice where you'd hoped it to be by now 3 years ago? Thanks, James. Okay, well, that's fantastic, Dominic. Very happy to hear that. Okay, well, as I say, if you're not going to type in the chat box, at least put it on some paper. Okay, so I've got a no from you, Julie. And, you know, some people will find that it is where they hoped it would be. I wonder if it's as good as you'd like it to be, but maybe it's where you hoped it to be. So the next question is it ultimately where you'd like it to be right now? Is it giving you the lifestyle that you really want to get out of it? The sense of fulfillment? I'm just going to ask you these questions now for you to write down on paper. I know it says in the chat box, but clearly not everybody's participating in the chat box. So just write it down on a sheet of paper. Just yes, no answers. This is all you need to be putting in there. Could you exit when you're ready to exit without having to have some kind of earn-out clause in place? I'm very pleased to see that as well, Dominic. Thank you for that. Because actually many people, they run their practice so reliant on themselves that the only way they can exit is to continue to be part of that firm for around 3 years, or at least maybe run the risk of not receiving the level of income that they'd like to, because maybe clients have moved on because they bought into them. Yep, okay, so thanks for that, Dominic. And then my final one is, will it give you the exit value that you're striving for at the moment? Okay, so look, the reason I've just asked a few of those questions is because this is now for you to decide whether or not this session's for you. If you are living the dream right now, then you're not going to benefit very much from this session. If you feel that actually there is room for improvement, I would like to be maybe working less hours and enjoying my life much more, having much more time to explore the world or do the things I'd really love more of, then this is absolutely the session for you. Because we can look at how you can modify your practice to enable that much more for you in your personal life. Okay. Now, in the next few months, the topics that I'm going to be sharing with you in much more detail are going to be how to value price your services, how to define and attract your ideal clients, so that A, you're getting much better rewarded for the stuff that you're doing, and you enjoy working with the kinds of clients that are going to be much more receptive to the types of services that you'd love to be offering much more. I'm going to be sharing with you some of the best practices that we see regularly across the whole of the UK, and I've put award-winning practices. These are the people who are getting multiple awards for different areas of the way they run their business. I'm going to be sharing with you best practices from that. And we're sharing with you how to sell and deliver much more advisory that works for clients. How to double, even triple the productivity across your entire practice, and how to develop a thriving team culture. And importantly, how do you find the time to do all of that? So these are going to be upcoming topics, but unless we're focused, unless we absolutely have a desire to be implementing these things, then even if you do attend, maybe it's just going to be background noise, maybe you're not going to take them seriously. So what I'd like to do is get you focused on whether or not those things are going to be important to you. Now, in the last session, if you attended my last session, I kind of shared this analogy, didn't I? That many people, when they take over a firm or they start up their own firm, and, you know, James, maybe this is for you, you know, you have this kind of cup that represents your life, the capacity that you have available in your life. And most people think, you know, I'm going to be my own boss, so I'm going to allocate a certain amount of time to running my practice. But because I'm my own boss, I'm going to choose my hours. I want to spend a certain amount of time with my family, with my friends, and on my health. And by that, I mean doing the stuff that I really enjoy doing. Maybe that's hobbies, interests, taking time out to relax and unwind. But sadly, over time, quite often, the needs of the practice start to dominate more and more of our lives, so that we're working more and more hours, or our mind is on the practice more, even when we're at home, often at the expense of family, friends and health. And our day can often feel like this. We're just running on that same treadmill, daily treadmill, not really progressing at the speed that we'd like to, maybe taking a few steps forward and a few steps back. And each day can often feel like this, can't it? Same shit, different day. Okay. Get out of bed, get up, get dressed, have breakfast, go to work, come home, have dinner, watch a film, go to bed. Repeat, 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 repeat. Einstein has a great definition for that, doesn't he? You know, doing the same thing over and over again and expecting a different result. So, as I said, what I'm going to do right now is let's take stock. Grab your pen and paper. And I just want you to answer these questions. It's not for sharing. This is purely for your own benefit. Sometimes we just need to be aware of the current situation right now. So I'm going to ask you a few questions and I want you to write them down. The first one, and again, please don't feel the need to share them. If you want to, by all means do, but don't feel that you need to share stuff in the chat box. This is for your benefit right now. So on a scale from 1 to 10, how much choice do you really have about the role that you're playing in that practice? You know, do you have the choice of stepping away from doing the day-to-day grunt work and maybe being more of a leader in the business, or focus more on marketing than anything else? So do you have choice about the role that you're playing, the hours that you're working? I mean, I'm a workaholic. I love working silly hours. I get up early in the morning and you know, I'm doing stuff. But I also have a choice. I've set up a business that gives me that choice. If I want to take... Actually, I am taking the rest of today off because I'm going skiing with my kids at the local ski place. But I can do that at the drop of a hat. But many people find that they're not in that position. They say, well, I'm self-employed, therefore I'm flexible. But if you're doing 60 hours a week, you know, your flexible gaps often mean that 60 hours might mean that you're working late in the evening. So how much choice do you have? How much choice do you have about the money you're taking from the business and the difference that you're able to make to your clients as well? So just give yourself a brief score on those things. And again, this is going to be gut feel. If you want to continue writing anything down after these questions, after the day, then fine. But I'm only going to give you a certain amount of time just to put a gut feel into some of the things I'm going to be asking you right now. So I want you to just create a bit of a grid like this. You don't have to do the lines, of course, but just put a line in the sand now. So what are you currently turning over? What's the profit coming from that? How many team members do you currently have? What's your client breakdown between your limited companies and then your non-limited companies, all the rest of the stuff, right down to doing your tax returns, etc. Write down how many hours a week you're working, the income that you're able to take from that business yourself. How many holidays do you generally get to take? And are those holidays interruption free, or do you get your team or your clients phoning you up, texting you, emailing you whilst you're on the beach? Do you have to take your laptop with you? And again, there's a difference between choice. So if you want to and you're happy to do that and it's not interfering, that's fine. This is about choice. Now again, a few more questions as we go on here. So right now, how would you describe the pricing strategy that you have in your business right now? Is it consistent across all partners or all team? If there are multiple people involved in recruiting new people, is it a consistent pricing strategy? Is it based on a cost plus stroke fixed price type of thing, or is it value based, or is it time? So what is it based on right now? Now, there's a few thought-provoking questions on screen, which I'm kind of just reeling a few of them off. Do you also suffer from scope creep? You know, based on the original proposal to the client, do they think there's more involved? Do they ask you to do stuff and you do it and maybe you don't charge? Or do you do it and then charge and they say, well, I thought that was included, and dispute it? So just have a think about that. And now what I want you to do is just give yourself a score on how effective that is. On a scale of 1 to 10, how effective do you believe your pricing strategy is right now? If it's 1, that means that it's appalling, it's inconsistent, maybe you've got some profitable clients and some not. And if it's 10, that means that every single client is profitable and you've got a consistent approach. So give yourself a score. And just also write a number down. How much money do you think you're really leaving on the table? Are there clients that aren't profitable? Are there clients that are getting more work for free than maybe they ought to be? So as I say, score out of 10 and just a number for how much money you believe you're leaving on the table. Also, how much cross-selling, cross-serving, if you prefer to use that language, cross-helping, how much of that are you doing with your clients right now? You know, do your team spot opportunities and present additional ways to help clients? Are you charging for those additional jobs that you're doing? And just remember, and I don't think you can see my little thing at the bottom there, but you know, actually research shows that the reason, not the reason, but one of the top reasons why clients shift accountants is because they didn't realise their existing accountant could help them in ways that they really want. And that's purely because their existing accountant didn't talk about it and another accountant did. So do you have a good cross-selling strategy in place that's really going to help your clients by spotting opportunities to help them in more ways? How about your acquisition, your client acquisition strategy? What does that look like? Do you have a specific one in place? Do you rely and hope for word of mouth recommendations? Maybe that's the way you've built your business, but are you in control of the type of clients that you're getting? Or have you got a bit of a mixed bag? Does some you just take on because you feel obliged to because of the recommendation? Or do you have a specific sales pipeline in place that's giving you the right types of clients of the high quality, the high caliber that you really want to be taking on, that are receptive to the type of work that you want to be delivering? So again, give yourself a score out of 10 on how effective these things are. I don't think I mentioned that for the last one, but score all of these on a scale from 1 to 10. If it's 10, great. If you're writing a 10 down, just ask yourself, am I being truly honest with myself though here? Now the next thing I'd like you to do is just draw this triangle on your sheet of paper. You can see it's a triangle and there are these dividing lines. And then I want you to put in these labels. So the bottom one here is compliance. The second one up is business services. The third one is growth solutions, business growth solutions. And then the top one is wealth strategies, wealth solutions. Now, I'll just very briefly explain what I mean by this, because these are really the categories of services that an accountancy practice might offer to its clients. Compliance it speaks for itself, doesn't it? Your bookkeeping, your payroll, your VAT returns, your tax returns, your year-end accounts, all fall under compliance. Business services is providing management information. So, for example, management accounts on a monthly, quarterly basis, cash flow forecasting, budgeting, they fall under this category. Business growth solutions then is sitting down with the client as a paid for service in a consulting, a coaching type role, providing strategic business advice that's going to help them to grow their business. So how much of your, that describes that label. I'll come on to the how much in a minute. And then wealth solutions might be dealing in exit strategies, in merger and acquisitions, maybe in some financial services such as pensions. Now, the reason I draw it like this is because generally, the level of income, the value to clients, and therefore the level of income that you can generate from these is much higher at the top of the pyramid than from the bottom. So compliance is seen as a commodity. People don't want to pay a great amount for it. There is a little bit of scope to really increase and value price of services, but very little compared to up here. And as long as you demonstrate the value of these services, people will happily pay a premium for them. And so therefore, if the majority of your work is coming from compliance, then we have to work with a high volume of clients to make that pay. Often that can mean either we're working silly hours to accommodate all of those clients, or we've recruited a team of people, a large team of people, to look after those clients, in which case the profits are diluted. In many cases, it's usually both. So what I'd like you to do now is think, whatever your turnover figure is, your gross recurring fee income, how would you break that down as a percentage of income against these specific areas? Okay, so is it 90% compliance with 5 and 5, or is it 50% compliance with 25, or do you have some in the wealth strategy? So again, no right, wrong, but just put that down in there, where it's coming from at the moment. Now I'm going to move swiftly on, so hopefully you've caught up with that and you've broken that down into those proportions. How do you believe you're positioned in the marketplace right now? Thinking about that pyramid that we just had up, you know, maybe you'd like to get more involved in some of the higher levels, but are you seen by prospective clients and existing clients as being able to deliver those services? What does your website say about you, your LinkedIn profile, your everyday communication? Do people just assume that it's just compliance, or would they seek you out to have business growth advice type services and want to pay for them as well? So again, think about your positioning as a whole and give yourself a score on how effective that is right now for you. Slightly related to that really is your online profile. Are you regularly publishing, I've put in content in there for some reason, content, not in content. Is it from an external party, or is it yourself that's doing this? Because quite often when we pay somebody else to do our social media for us, it's just plain vanilla, generic, usually technical content. Now, there's nothing wrong with the technical content, but it has to be complemented with you as a human being talking about other stuff that's going to help them as well. So because people buy people these days, and every accountant out there is pushing technical content out there, but people buy people. So are you conveying your values, your mission, your purpose, your beliefs in your online profile as well? So again, give yourself a score for effectiveness on how good you think that is. Do you have your entire customer journey mapped out from the moment somebody discovers you? Maybe it's on your website, maybe it's through a referral recommendation. I mean, even on a referral, then they're not likely to just pick up the phone and say, can you work with me? They will do a bit more research on you. They'll Google you. They'll check out your LinkedIn profile. They'll check out your website. What does it say? Right through to maybe how are you wowing them? How are you raising the value perception along every single step of that journey? When they're working with you, what's the onboarding process like? What's the customer journey like as a customer? Are they being wowed on a regular basis? Do you have all of this mapped out in terms of bells and whistles? And is it systemized for consistency so that every single customer gets exactly the same experience every single time, and that's continuing to improve year on year? So again, it's just think about what that strategy looks like right now and how effective that is on a scale from 1 to 10. Your team culture. Now, I appreciate some of you on here won't have a team, some of you will. Some of you might have lots of team members. So what's that team culture like? Maybe you're outsourcing as well or offshoring. So again, is the culture there, or is it disjointed? Are your teams stepping up? Are they making recommendations, or do they just keep bringing you the problems? Do they make lots of mistakes that you have to rectify, or are they self-checking and making sure that they've got that kind of commercial attitude? Do they go the extra mile for you? Are there things within your team that you're tolerating right now, you're not necessarily dealing with, but you're biting your lip over, that actually if you did deal with, it might change some of the results that you're getting? Again, give yourself a score on how effective that is for you right now. And finally on this section, think about how your time, so I've got you to write down how many hours a week you're working right now. That could be 35, it could be 55, it could be 75, and anywhere around that as well. But how are you utilising that time? So how is it broken down between leadership activities? In other words, really spending quality time coaching your team, or quality time working on the business to make it work much more for you. Sales and marketing, proactive. So are you getting out there to networking events? Are you spending quality time on social media or creating marketing literature? Or again, maybe you're just hoping that you'll get the word of mouth. So what proportion of that is spent on that every single week? How much time are you spending in operations, and how much time are you spending in admin? And again, just ask yourself, do you feel that you're utilising your time in the best possible way right now? So give yourself a score of how effective you feel that you're using your time within your business at the moment. Now, the last thing I want you to do on this section is draw yourself a big circle. Okay? Put these lines through it so you'll see, just for ease, you've got a vertical, a horizontal, and then 2 diagonals. Okay, so in other words, you're getting 8 segments. And then I want you to put these labels in there. You can put them on the outside, you can put them like I've done it doesn't matter. Friends and family, significant other, personal growth, fun and leisure, home environment, business fulfillment, money and health. Just give it those labels and then give yourself a score. If the very centre represents 0 out of 10 and the outer edge represents a 10 out of 10 that you're really happy with, maybe how much time you get to spend with your significant other on personal growth and development, how happy you are with your home environment at the moment, all of those things, give yourself a score. Now, I would recommend that that score is represented in the form of lines, okay, so distance from there, because we're looking at how balanced your wheel of life is outside of that business. Because ultimately your business is responsible to a large extent for this. Not 100%, of course, there could be friction in the relationship that's independent of the business. But your business is going to help you achieve a much better balance across many of these areas. So what's that looking like right now? Because that's the consequence of your business to a large extent. So as I say, very quickly complete that. Now, for those of you who are participating in the chat box, just put one word in there that tells me, that will sum up how happy you are with the current situation, how happy you are with that wheel of life. Is it well balanced or not? Is the practice really giving you what you want to get out of it? So just one word, sum up how you are currently feeling. You're a tough bunch. I normally get lots of people typing in the chat box for me, so maybe you're having, I don't know, maybe you're just thinking of the word, or you just don't want to volunteer it right now. That's up to you. At least write it down on your sheet of paper so that you can just reflect on how the current situation is making you feel right now. If you don't want to share it, that's entirely up to you. But ultimately, I'm going to take my jacket off because it's suddenly got very warm in here. Thank you, Matthew. Average, okay. Average. Are you happy with average? Or would you like great? Would you like awesome? We can all, I mean, that's the challenge, isn't it? I have found with accountants that actually from the outside point of view, maybe life looks shit, but I've kind of gotten used to it. You know, I've started working gradually more and more hours, but I've gotten used to it. The income's not great, but I've gotten used to it. So actually, you know, generally it can look average, can't it? So awesome, please. Yeah, absolutely, Matthew. Let's look at that. Now look, we've all, throughout our entire lives, been brainwashed. From the moment we were born, we've been influenced by parents, by siblings, by school teachers, and friends, and when we start our jobs, by our employers, and even our team members. We've been brainwashed along the way. And some of that brainwashing can lead us to have a set of beliefs that perhaps we should question. Some of those beliefs might be, you know, I'm only worth so much. You have to work hard and long hours to be a success. Clients have to come first. Any client's GRF, so therefore you should take anybody on. Sometimes you have to work with rude clients, just live with it. You have to compete on price. Wanting more income is just greedy. Clients don't like to be sold to. I can't sell. I can't deliver advisory. Or even, you know, who am I to advise? Maybe there's a degree of imposter syndrome there. Many people experience imposter syndrome. I must respond even out of hours. Getting help means I've failed. That these are self-limiting beliefs that can hold us back. These are some of the beliefs that might be responsible for why your practice is where it is right now. And ultimately, we can't solve our problems with the same thinking that we use to get us here. We have to change the thinking. Because firms that do things radically different are getting radically different results. Now, I firmly believe that accountancy is a noble profession that can make a profound difference, and it also deserves to get really well rewarded for that, both emotionally as well as financially. But not by doing this, not by being stuck on this kind of endless treadmill, maybe in many cases back office doing the grunt work, because quite frankly, clients don't value an accountant sitting back office just creating the accounts. Computers can do that, outsourced people can do that, team members can do that. What they really value from their accountant is the quality time they get to spend with them in communication, in face-to-face, whether it's Zoom or physically, having conversations about how they can maybe change those numbers, what the numbers really mean, how they can be better, and giving them some advice. So we did this triangle earlier, didn't we? Many people that I speak to are kind of the majority of their income is coming from compliance. But if you can make a fundamental shift, of course, still doing compliance, that's what you do, but actually including business services and growth solutions, then clients will value your services much more. They will be happy to pay you much more. You can afford to work with a fewer number of clients in this scenario as well, which means you can reduce the amount of time that you're working in the business. And let's face it, your competitors, your rivals are already making this shift. They're providing that level of value and support to clients. But in addition to that, we are already seeing technology take over and change the way that we are producing accounts. And it's making it quicker and easier for us in many cases. But we're already seeing TV ads that are targeting business owners saying, this piece of software, I'm not going to name names, but you don't need an accountant for this. You can do your own tax return. You can do this, you can do that. And we're seeing that change on an ever-increasing basis, aren't we? That, your computers will do this stuff for you. So there is a real need to make that change. So what does success look like for you? If you really had choice about the role you played, the hours you worked, the income you take, and the difference that you made. Let me just give you a couple of quick examples now. And these are just examples of people who are single partner firms. The reason I'm just showing the single partner firm case studies is because obviously, I don't have time to show all of them for a start, but I want you to believe that actually if a single partner can do this, imagine what a multi-partner firm can do as well. And I know we have a variety here, but Neil joined us as a startup just last March, and within 7 months, he achieved a practice that was turning over 160k with just 30 clients. He doesn't do any of the compliance work whatsoever. He outsources 100% of that. He personally delivers growth solutions to his clients. He works 2 to 3 days a week for that. It's all done on Zoom, and he personally takes 100k of income. So that's a great lifestyle for him. That's what he wanted to achieve, and he's continued to grow actually in the meantime. Another example is Alan. He was actually working 200k turnover, 200 clients roughly, 5 team members, still working silly hours and barely able to take anything for himself because his profits were diluted through his team. After a couple of, actually 4 years in Alan's case, he's made this gradually over time, of course, but made this transition to working with just exclusively 10 clients. Each client's paying 30k for the work that he does for them. And again, he's working 2 to 3 days a week and earning a significant amount of income for that level of service that it provides. Now you might think, well, 10 clients, that's, if you lose one, that's a massive drop. He's got a list of people that want to work with him, but he makes them wait because he'll only work with 10 clients. So if he does lose one, which is rare, he's got somebody else ready to come straight in. And there are example after example. One member was only turning over 30k and had been that for quite some time. After just 11 months, she turned that into 260k practice. Again, working just a 4-day week. And there are lots of examples, 50k to £1 million practice, 800k to a £6 million practice. So there are lots of examples. What do you want to achieve in yours? Did any of those appeal to you? Would you like to be building a practice that gives you better income, that's much more enjoyable to run and gives you much more time to do the stuff that you'd love to do? I'm not even going to ask you to put it into the chat box. But look, our mindset is the thing that can hold us back, can't it? It can limit what we believe is possible. And I really want you to believe that you can create the practice that you want to, but we have to map out what that looks like. So I'm just going to very quickly show you the shift that many people have to take reluctantly, because they are confessed control freaks, but have to take in order to get away from this everything depends on you scenario. Because most people, when they set up a practice, it doesn't matter whether they're a multi-partner firm or not, each partner has their clients, they're doing the work, they're seeing prospective clients, and they're seeing their clients. They may take on a team of people, they may have got a massive team, but they still are the bottleneck, double checking work. That's a business operator mentality. Where certainly we help people make this fundamental shift to is the partner does not see any clients whatsoever. They take a step away from that completely, and they become a client manager. They build a team of client managers that are looking after their clients. Now, questions often come in, well, what if they run away with my pool of clients? There are things you put in place to prevent that and create the environment where they don't want to do that. But that's ultimately the best way to grow a scalable business, because as each of these client managers are doing the work, double checking each other's work, etc., they're also taking on new clients. The business is growing. And as they reach their capacity, then you can just start to add to the pot. You can split these teams down the middle and create more and more of these types of client managers. That is the business owner type of mentality. So look, in the last few minutes we've got together, I just want to change your focus. Forgive me, just jump in on my slide. So what do you really want? Let's get your piece of paper right now, because you've got a choice. It can either be doing the same stuff every single day. Maybe you don't define it as shit. Maybe that's just unfair on my part. But for some people, it's like, oh, I'm sick of doing the same thing every day now. I'm stuck on this daily treadmill. But you can choose to write what the next chapters of your life are going to look like, can't you? You know, people often say to me, oh, do you know, if I won the lottery, I'd love to tour the world. I'd love to spend more time with my family. I'd love to do all of these things. Well, quite frankly, your business should be enabling those things anyway. You shouldn't have to want to win the lottery in order to enable it. A true business gives you that kind of lifestyle. Now, I'm going to ask you to define what you really want. But a mistake many people make is that they'll look backwards and then they'll use that as a way of projecting forward maybe what the business should look like going forward. And maybe it's been 5, 10, 20% growth, 50% growth, whatever it is over the years. So I'll just project that forward. That's the mindset of carrying on doing what I'm doing. And sometimes in order to improve by 20%, we often end up just working 20% harder. So my recommendation to you, and actually the likelihood with everything that's changing and happening in the landscape right now, is that likelihood might be less. So my recommendation is to you is think 10 times bigger, because you can't possibly work 10 times harder to achieve that. We have to change the thinking to achieve that. So think 10 times bigger. That will change your mindset. In the coming sessions, by the way, I'm going to be sharing with you exactly how you can get there on this 10 times bigger approach. But your journey may not fully achieve that. But if it gets 3/4 of the way towards that, is that better than this scenario? We have to change our thinking. So I want you to imagine for a moment being able to change the numbers that really matter to your clients. Imagine developing Imagine changing lives. Imagine being able to do more of the stuff that you really want to do outside of work, whether it's seeing your kids, your grandkids at school on their activities, more time on the golf course, going for walks with the loved ones, more relaxing holidays that are uninterrupted. So I want you to go into magic wand territory now and just think, right, if I could wave a magic wand, if anything were possible, if nothing were going to hold me back, what would you love to achieve from that practice? Scenario, whatever it might look like for you, to a much more balanced and happier lifestyle outside of it. So what needs to happen for that to happen? What do you want to take out of the practice, first of all? Just think about, what does your personal income need to look like? How many hours a week do you need to be working or want to be working? What do you want to strive for? How many holidays a year do you want to be taking? And then just write a quick note. How will that make you feel? And then think about, well, what will this mean for my family? If I'm able to work less hours and I can do more of these things, what would that mean for the rest of my family? your significant other, kids, grandkids, parents, uncles, aunties, cousins, nephews, whatever it might be, or just able to tour the world, or whatever it might be that's important to you. Okay. Now, what does the business need to look like? Just give yourself a short sentence. What does it need to look like to give you the business that you really want? Is it a business that doesn't rely on you at all? Is it a business that just allows you to get involved in the stuff that you really want to? Many people say to me, I'd love to be doing just advisory, not the compliance work. You may have a different opinion there, but what do you want to achieve? What role would you love to be living, playing in that business? What services do you really want to be delivering, compared to maybe the ones that you end up doing but you don't particularly enjoy doing? And then just write a few numbers down on this for you. So again, you can just write the labels down. Maybe there are more labels that you want to put down. What's important to you? And I've put, desired exit value on here as well. So what turnover do you want to be achieving, but what's your exit value? Because actually, if you put the right mechanisms in place, then your exit value can be significantly more than whatever the turnover level is, or the EBITDA. You can apply many more multiples to those things just by putting the right mechanisms in place in your practice. So what's your desired exit value? And maybe that's 2 years' time, 1 year's time, or 10 or 20 years' time. But just think about what that is for you. Now, I don't know if I'm going to ask you to put it in the chat box or not, but at least write it down. How much better than now is that for you? And how would achieving it make you feel? Now, in the last couple of minutes that I've got, and I don't know if I started on time, my clock says that I've got 5 minutes left, but it's 10 o'clock, so hopefully I'm not running late, and it just is that I started a little bit late. But I've got literally less than 5 minutes left on this presentation. The last thing I want to talk about is we can all be guilty of putting stuff off and falling into the when-then trap. The when-then trap is thinking, I just need to get my ducks in a row. Maybe I'm just waiting for the perfect circumstances to arrive before I start to take this stuff seriously and start to improve things. Maybe it's when I've got more higher paying clients, when I've got this, when I've got that, then I'll start to take this stuff seriously. And we go through life thinking, someday I will improve things. I will do it this time next year, or 5 years' time, or whatever it might be. And in the meantime, we just carry on doing the same thing until it's too late to do anything about it. And I want you to just have a sobering moment right now. What age do you reasonably expect to live to? I don't know what the age group is across here, but what age do you reasonably expect to live to? How do you want to make the most of that time that you have ahead? Do you want to be spending far more time in the practice than actually enjoying your life that you have ahead of you? And I'm saying this not that you count the days, but that you make the days count. Just think about how you're going to spend your time making your business work for you on your terms, rather than you feeling sometimes like a slave to the business. Earn the income you'd love to, make the impact, leave the legacy that you'd really love to. Now, the final part of this is that I just want you to think about when you're going to achieve this by. I want to encourage you to put a deadline date in, and I don't want it to be too far in the future. Because when we have a deadline, and you see this with tax returns, okay, there are kind of zones that appear just before a deadline. So first of all, we have a will do zone. I will do this, and that's very close to the deadline, and that's when people get their stuff in. We have a must do zone and a should do zone, but then outside of that kind of timeline, we have this could do zone. And when we're in this could do zone area, it's so far away, this deadline, that it's important, we know that, but it's not urgent. So we don't do anything about it. And it's not until we start to get closer and closer do we start to take the actions necessary to achieve that deadline. So my recommendation to you is set yourself a deadline that's not too far away. If you don't set a deadline, then you're just going to go through life, as I've just mentioned, same shit, different day, every single day. We have to set ourselves a deadline, but it needs to be reasonably close. I would recommend not more than 3 years. So give yourself a date that you're going to start to improve your lifestyle. Write that down, and print it. Okay, so that is me. Actually, I've finished, I think, with a few minutes to just a couple of minutes after 10 o'clock. I know chat box activity hasn't been great today, but just out of curiosity, has today been useful to you? Has it been thought-provoking? Has it given you, you know, some ideas on where you need to focus in your practice to make some improvements? And obviously, if that's the case, then my upcoming sessions are going to help you to make some of those improvements as well. So let me just pull up my last couple of slides. I don't know if there are any questions. A quick reminder here is, let's see where I need to switch it on. A quick reminder, my upcoming events, value, price and attracting the right clients, best practices that I'm going to be sharing, selling, delivering, advisory. Thank you for that, James. Thank you for that, Shilan. How to double your productivity, develop a thriving team and finding the time. They're my upcoming ones. Actually, if you want to grab a copy of my book, you are more than welcome to grabbing a free copy. Just visit the website that you can see above. And you'll be able to download a copy of that as an ebook, but also we'll then email you and ask if you'd like a free copy sending out, and you're more than welcome to a free physical paperback copy. So I just want to say thank you and leave you with this final holding slide. That's it from me. All the best to you, and I'm just going to make this slide large.